So for those that don't know what happened this last week with Navy Federal Credit Union, apparently they've been accused of rejecting more than 50% of African American borrowers for mortgage loans. Now before we get upset and start pointing fingers at people in credit unions, let's take a closer look at what exactly is going on. I've been in the real estate field for over a few years now, and I've personally seen plenty of people get both denied and approved for a mortgage loan because I am a licensed real estate agent and a licensed mortgage loan originator as well. So in this video, I kind of just want to talk about the incident that happened with both Navy Federal and the consumer that was trying to get the mortgage loan with them, and just go over the situation from a mortgage loan officer's point of view. If you're already subscribed, then welcome back. But if you guys are new to my channel, my name is Ismael Sandiford, and you are now watching Just Money, where we talk about financial related topics such as personal and business credit, real estate, and other financial related topics. So if that's something you're into, then you're probably going to want to consider subscribing. But without further ado, let's get into today's video. So a few weeks ago, an African American gentleman named Bob Otondi from Dallas, Texas was trying to receive a mortgage loan from Navy Federal. He was already pre-approved for a mortgage loan with them, so that was all he needed to begin searching for his dream home. He then found his dream home in a nice neighborhood, and even his son liked the home as well because his son plays basketball and wanted to be near the school because they have an amazing basketball program. But when pulling the trigger on his dream home and proceeding forward with the Navy Federal mortgage loan, they denied him during the underwriting process. Now if we look at Bob's situation, the man is a business owner, he has a pretty good credit score over the 700s, the guy has 20% to put down, and he's making over $100,000 a year. So why in the world would Navy Federal deny him for a mortgage loan? Now I've been in the real estate business for quite some time now, and I personally know some clients that have been in Bob's similar situation and they got denied too. So let me explain one of the reasons why this happens. So as I mentioned earlier, Bob is a business owner, which means he's a 1099 self-employed person versus a W-2 worker. And when it comes to mortgage loans, honestly, the truth is lenders typically prefer to give out mortgage loans to people who are employed by a company, aka W-2 workers. Because whenever you apply for a mortgage loan, lenders like to see your ability to repay the loan back by examining your income stability and consistency. So pretty much what this means is lenders just want to know that they're going to be secured and pay back if they let you borrow hundreds of thousands of dollars to buy a home. Because having a W-2 job offers a more straightforward path, and it shows them stable income coming in, which is something lenders like to see. And another thing I do want to add on top of that is you're already getting taxes taken out of your check every time that you get paid as a W-2 worker. Because if you're a 1099 self-employed person, then that does not happen. People that are 1099 workers receive all of their money up front without any taxes being taken out of, and this can be both a good and bad thing. Because here in America, no matter what, you're still going to have to pay taxes on the money that you earn, whether you're employed or self-employed. 1099 workers are going to consist of being a freelancer, an independent contractor, having your own business, or other type of self-employment work. 1099 self-employed people do have the option though to write things off because of their expenses, so that way they don't have to pay as much money back in taxes. But you have to be very careful when doing something like this, because if you write too many things off and you don't pay enough money back in taxes, then this can affect you when you're trying to obtain a mortgage loan. And I'll use myself as an example. I've been a 1099 self-employed person for over 7 to 8 years now, and it definitely has its pros and its cons. A few years ago, I tried to buy a home because I wanted to get started in real estate investing, so I was looking to buy a multifamily residence. I had a good credit score, definitely over the 750s. I was making over $85,000 a year, and I definitely had money to put down as well. So something kind of similar like Bob's situation. So when it came time for me personally to get a mortgage loan, I thought I had it in the bag. But whenever you obtain a mortgage loan, loan officers are going to look at a few things. And one of those things is going to be your net income. And for those that don't know what net income is, let me go over what gross income is, and then I'll go over what net income is. So gross income is all the money that you earn before taxes and other deductions that are subtracted. And then net income is the amount of money that you bring home after taxes and deductions are already taken out. So to simplify this, gross income is all the money that you made, and then net income is pretty much the amount of money that you're bringing home after everything is all said and done. But back to the story of me getting my mortgage loan that I thought I was gonna get. I ended up getting denied for this mortgage loan. And come to find out, the reason why I got denied for the mortgage loan was because I was writing too many things off. Because yes, I was grossing over $85,000 a year, but after all the write-offs I did, I ended up netting only $14,000. And I wrote a lot of things off on purpose so that way I can keep my money, so that way I didn't have to pay that much back to the IRS, which again can be a good and bad thing. But since I only net $14,000 and I was trying to obtain a mortgage loan for hundreds of thousands of dollars, that's what led me to getting denied. And this is pretty common for people that are business owners, freelancers, or just doing any kind of self-employed work out there. And honestly, I think this is probably what happened in Bob's situation. I'm not saying it did happen to him, but it can be a possibility because we don't have enough information to give any real input. But I will say though that business owners and 1099 workers do have a harder time qualifying for mortgage loans because of this issue. And usually if you fall under this issue, then there's definitely still mortgage loans that you can get out there for sure, but just not a conforming loan. People that fall under this issue usually have to get something called a non-QM loan, aka a non-qualified mortgage loan. And a non-QM mortgage loan is a type of mortgage loan that allows you to qualify for a mortgage loan still, but based on a different case scenario than a traditional mortgage. And a few examples of a non-QM loan is going to be a P&L loan, aka a profit and loss loan, a DSCR loan, aka a debt service coverage ratio loan, and another is going to be a bank statement loan, which is pretty common for business owners. How bank statement loans work is they qualify you based off your bank statements anywhere from the last 2 to 24 months. The only downside about these non-qualified mortgage loans is that you're required to put more money down and you're going to be at a higher rate. But at the end of the day, you'll still get into a home. And that's just one option you can do if you have a lot of write-offs, but you still want to obtain a mortgage loan. The other option is you can amend your taxes. When you amend your taxes, you're pretty much changing your tax return information from the previous year. And you would do this so that way you wouldn't have as many things written off, so that way your net income can be higher. Because if your net income is higher, now it appears as though you're making more and now you could qualify for a larger loan amount. But the downside is you would have to pay back money to the IRS. And that amount is going to vary depending on the mortgage loan amount that you're trying to get approved for. So talk to your CPA before doing something like this. Now again, one more time, I'm not saying this is Bob's case scenario, but this can definitely be a possibility. So before we say Navy Federal is redlining African Americans, I just feel like we don't have enough information to know that quite yet. And for those that don't know what redlining is, it's pretty much denying a credit-worthy applicant for a house in a specific neighborhood based on their race, even though the applicant meets the criteria and is eligible for the home. Now CNN did ask Navy Federal why Bob's mortgage loan was denied, but they couldn't make a comment on that because of FACRA, the Fair Credit Reporting Act, also known as the Fair Credit Reporting Act of 1971. And one of the things this law pretty much does is protect the privacy of information collected by consumer reporting agencies like credit reports and stuff of that nature. But honestly, no lender out there should be giving out any of this information to even begin with unless they have consent. And honestly, guys, to be real, there are way better lenders out there to get a mortgage loan other than using Navy Federal. The only time I ever recommend getting a Navy Federal mortgage loan is if you're getting the home buyer's choice loan that they offer. And I say this because you can get into a home without putting any money down and potentially paying no closing costs while at the same time no private mortgage insurance as well. The rate's going to be a little higher though, but the fact that you're not putting any money down and potentially paying no closing costs with no private mortgage insurance is huge. But another one of the downsides of the home buyer's choice loan is that it's only for a single family residence. You cannot use this mortgage loan to obtain a multi-family residence. In fact, Navy Federal doesn't even offer FHA loans. They only offer either VA or conventional loans. And if you're getting started in buying real estate property, then I always recommend people to get an FHA loan, because with an FHA loan, you're allowed to do a 1 to 4 unit residence while only having a minimum FICO score of 580 while only putting 3.5% down. Now, everybody's personal case scenario is always going to be different. Maybe some people don't want a multifamily residence, which is completely fine, and they want a single family residence instead. But again, there are other mortgage lenders out there, and you don't have to go with Navy Federal. So for those looking to buy a multifamily residence, you're probably going to want to start out with an FHA loan. But back to CNN, they did an analysis showing you that more than 75% of white borrowers got approved for mortgage loans, while on the other hand, less than 50% of black borrowers got the same approval despite similar income and debt ratios. Now, just because these numbers are up, this doesn't prove that any discrimination is going on at all, because honestly, there has always been a gap between the white, black, and brown community here in America. Now, I'm not defending Navy Federal because redlining is a thing that does happen in the mortgage industry, unfortunately, but if this is actually going on, then yes, it's a violation of the Equal Credit Opportunity Act and the Fair Housing Act as well. And Navy Federal can be sued for this if this is the case scenario. But I don't really have an opinion on this at the moment because there's just simply not enough information to prove what exactly is going on here. I would just shop around with a bunch of different lenders and get multiple pre-approvals and official loan estimates so that way you can see what is best for your personal case scenario. And don't worry about your credit being pulled a bunch of times, because if you're shopping around for a mortgage, all those credit checks will be reported as one single inquiry if you're doing it within a 45-day window. So the first day that you get your credit pulled for a mortgage, that's when your 45-day window starts. And again, Navy Federal isn't the only place to receive a mortgage, but as far as their credit cards, their auto loans, personal loans, etc., they're super good in my book. But that's all I really have to say about this topic. Let me know what you guys think about this in the comments below. And also, do you guys have any other banks or credit unions in mind that you would like to start banking with? Let me know in the comments below. I would like to know. But if you guys made it to the end of the video, we are at 26,144 subscribers at the time of this recording, so I do appreciate y'all who watch. I do post weekly videos for those that don't know, and if you guys haven't yet already, don't forget to hit the like button, subscribe to the channel if you haven't yet already, and don't forget to hit the notification bell so that way you guys get notified every time post a new video. And again, we talk about personal and business credit, real estate, and other financial related topics, so if that's something you're into, you're probably going to want to consider subscribing. We talk about how to get high limits on your guys' credit cards, we talk about how to boost your personal credit, how to obtain business credit, we talk about real estate, we talk about mortgage loan programs, we talk about all that. So this is your one-stop shop. And again, for those that don't know, I'm a licensed real estate agent, a realtor, and I'm also a licensed mortgage loan originator as well. So if you guys have any questions in regards to real estate, all my information is in the description below. But if you guys made it to the end of the video, then I truly do appreciate you for watching, and I will see you in the next video. Thanks for watching.